What's up, interwebs? It's your realtor, Jeremy. It's Tuesday. It's time for the Tuesday market update. This is the first one of April, so we're going to take a quick look at kind of all the numbers for March just to kind of see where we're at given what happened last month. This will be a little bit longer format video just because we're going to kind of gloss over a bunch of numbers just to see what's happening across our metro area. So first, let's get into it and let's look at Chandler. All right, so what we're seeing here, steady increase. Let's see, from average sale price in December was $242. Now we're up at $290. So that's a $50,000 increase in average sale price in the last 3-4 months. Here's interesting. So we've been talking about no inventory. And the bottom line, it's not because we don't have houses, because we've been selling more houses than ever before. It's one of the reasons why, I talk to realtors and this is such a difficult market. It is difficult, but it's one of the best times to be a realtor ever because there are so many houses selling right now. We have a ton of people that are buying, and we actually have quite a few people that are selling. We just have so many more buyers than we have sellers that our inventory is low. Our numbers are insane right now. You can see that both new listings and sold listings both picked up. Sold listings actually picked up a little bit more than the new listings, so that's why we're still at historically low inventory. Look at this sold to list ratio here. That just gives you an idea of the kind of price adjustments we're seeing in people that are offering well over asking. You usually don't get a lot of full percentage point moves. It's usually oh, hey, we're at 99.7, and then, oh, hey, we're at 99.9, big change. This is humongous. We went from, sold to list from 101 to 102.7, so 1.5% change. And the other thing I want you guys to notice is normally it's the sale to list price ratio that's closer to 100. It's usually higher because sold to original list price means that's the first price they put on it. Maybe they did a price reduction before they sold it. So that's why there's kind of two different lines here. But as you can see, the black line, the sale to original list price is actually higher than the sale to the most recent list price. That is insane, and that is the marker of how hot this market is and how many houses we have selling for over asking. Not every single one, but the vast majority of them. I say that because, I'm under contract. I'll tell you more later. All right, average sale price. It's saying that in Chandler we've gone up by $103,000 in a year for the average sale price. 26% appreciation. Just appreciation through the roof. And Chandler is not going to slow down because Intel is opening up two new fabs. They have plans to build 2 new fabs down in Chandler. So Chandler, Gilbert, Queen Creek, these numbers aren't going to change. The need for housing in Chandler is not going to change anytime soon. Let's look at sold, bulk 300 to 400. And let's see, it looks pretty similar to the previous year. There's a big one, 550 to 750. You've got 50 more than last year. Across the board, the higher value. So I don't know that it's necessarily that Chandler is appreciating at a 26% rate. It's probably close to that, but we're also seeing a lot more higher end homes getting sold in Chandler than we have the previous years. Obviously, the bulk of them is still in that 300 to 500 range basically, but above 500, we've sold a lot more. And a lot of that's because we have a lot of California buyers coming in, and they can afford, because of their housing values out in California, a little bit higher price home. All right, let's look at Gilbert. All right, similar look to Chandler. Let's see if the increase has been as much. 471.50, so about the same increase. A similar kind of ramp up, but you can see it's even a little more pronounced in Gilbert. All right, average sale price in Gilbert, $520, up from $420. So another 23% change. Bulk of the house is sold. So here's a shift happening in Gilbert. The vast majority of the homes were in that 400 to 500, but look at where 550 and 750, they're coming in strong. So we're probably seeing, again, a little bit of the same thing, more high value homes selling. Also, it could be that just stuff that was in this 300 to 400, because of the over asks, they're popping up over the 400 mark. So there's definitely, it's one of the reasons I didn't worry too much about not doing a market update last week, is because what's happening in this market is happening so rapidly that it's hard to discuss numbers in the last week of the month for what was happening in the previous month. It's just, there's not as much bearing. I mean, you can see yourselves from February to March, big jump. February to March, big jump. We did have that more inventory I was expecting to come in, but the buyers kept right on pace. So let's check Queen Creek, because I know Queen Creek is now functioning very, very much like Chandler and Gilbert, and actually in price point is almost identical to Gilbert. Okay, looks generally the same. They've had a little bit bigger price increase out there. Actually, I love how these graphs like change their number on the side here, and then you're not sure exactly what you're looking at. But December 466, now just shy of 500, so 40% or $40,000 shift. We did have some more new listings, but as you can see, the solds were actually outpacing the new listing. And wow, look at that spread there. So I wonder if in some of these cases we're going, like, the agent lists the house and then changes the list price. I've been seeing some of that, where the agent will actually change the list price after it goes under contract to what the contract amount was. I don't think we're supposed to be doing that, but I've seen a lot of that lately. And so that's why we might be seeing a separation of the tan and the black line there, because this will look, my understanding is that will look at the most recent listed price before it closes. So that might be what's causing that tan and black line to separate a little bit there. Inventory, 0.6? Yep, 0.6. All right, Queen Creek, 497 up from 415, so 19%. Here's something interesting. If you guys have watched this, I mean, a couple of years ago, I think this summer will be 3 years I've been doing this show. I did like an appreciation contest of the cities to find out what was the best appreciating cities. And Queen Creek has always come out as the top appreciating city. And they're not right now. They're at about 19.75%, whereas Chandler and Gilbert are in the 20s. That's interesting. I don't know that it means anything particularly, but it's interesting. I do want to know who bought a house for under $30,000. Bulk 300 to 400, but as you can see, when you compare year to year, quite a few more high value, high dollar houses. I think that's what we're seeing. We're seeing a lot of competition in the lower prices, but I think we're moving inventory like across the board, a lot of higher value inventory. Because if we look back again here at this, we're actually down in the 300 to 400, about even in the 400 to 500, down a little bit in the 500 to 550, and then up almost the rest of the way. Let's check Peoria, just so we give the west side some love. All right, so similar stuff happening over there. We are consistently having a good amount of listings. We just have so many buyers right now. It's crazy. We've got, let's see, it looks like in December it dipped down a little bit and then came up about 40,000 so. Again, like we saw in Queen Creek, we're seeing a little bit of a gap forming there, and I think that's why, because of the way the agents are doing some things. I don't think we're supposed to do it like that, but it is what it is. But that's, like I said, substantial jumps up. So those are showing that in Peoria, tons of stuff going over asking. We've got just 6.6 months of inventory. Their average sale price, $432,667, up from $354, 21.9% change. Strong in Peoria. And Peoria, we got inventory that's across the board here. The bulk of which you can see are down here, 116 versus 131 last year. But overall, we're up by, 20 houses? So strong in Peoria. Let's check one of our luxury markets. Let's check Scottsdale. All right, Scottsdale, we've got a convergence of new, active and sold listings are like almost identical. That just shows you how low the inventory has gotten. Because no matter what the market's been, Scottsdale's always been a little bit more robust in available houses. It was sitting at 2,300 in April last year. Now we're at 972. Oh, goodness. As you can see in Scottsdale now, we have topped over asking. So we've done enough. It's kind of caught on to the luxury market that we're seeing over asking up there too. And I do know if a house is really nicely done, even in the luxury price points, it's moving quick. I've even seen, as I've watched the market a little bit, I've seen some $3-4 million properties that sell quickly, like within days. But it's because they're beautiful, they're really nicely done, they're not weird like some luxury houses are weird. They've got like weird things happening. They've got different kind of architectural features that just don't make sense to the general public. So we see some of that. Let's see the average. 901,889 up from 706,17, almost 28% change. Yeah, that's almost a $200,000 difference in 1 year. We've never seen it. I don't know. We've not seen anything like this. I know we haven't, because even with the increase that were happening in 2006, 7, 8 time period right before the crash was not true demand. Like, it wasn't demand for people to live in the houses. It was speculators. People were buying up properties just so that they could turn around and sell them, or holding on to them so they could then turn around and sell them for a profit. What we're seeing right now, even though it's more the appreciation is happening more quickly. There is even more demand than there was then. The reason it's different is because this is true demand. The people that are buying houses are buying them to live in them or to rent them out for someone to live in. This demand is a true, accurate demand of people that are looking for a place to live. So that's why there's a lot more confidence in where the market is right now than it was the last time we saw appreciation levels at this rate, which I think were even higher than we were back then. I mean, $200,000 in 12 months for Scottsdale, that's some intense appreciation for sure. And as you can see, look down at this list, tons of high-end homes, tons of luxury properties, million plus. Geez, we're probably almost... That's not quite double. That's more than double. That's double. That's double. That's way more than double. Yeah. In the luxury price point, we're selling a lot more houses. Again, a lot of people, a lot of agents get frustrated with this market, get frustrated with the competition over the houses, especially buyer's agents. It is tough. However, this is one of the best times to be a realtor. There is so much business to be had. It's exciting. It really is exciting. And if you are looking to buy or sell, again, buying super competitive, so you need a really good agent in this uber competitive market. Selling, you need someone who can help you navigate and negotiate getting 30 offers on your house, getting 40 offers on your house. Whatever the case is, you need someone to help guide you through that process to make sure you're making the right decisions for your financial future. I appreciate you guys checking in this week on the market update. We'll get back into some more detail, look at some different areas. We'll look at a couple other areas, probably look at some Phoenix Ahwatukee next week maybe. I hope you guys have a great, awesome rest of your week, and I will see you next Tuesday on the Tuesday Market Update. Bye, guys.